All right, welcome back to the deep dive. Today we're diving into the world of Mitsui Co, a global powerhouse. They've got their hands at everything.
Absolutely.
And we're going to be focusing on their fiscal year ending March 2024. And right off the bat, those headline numbers, they're pretty impressive.
Yeah, they really are. Mitsui, they've generated over 1 trillion Japanese yen in core operating cash flow. And not just for 1 year, but 3 consecutive years.
3 years in a row.
Yeah, it's incredible. And they're reaching historically high profit levels. Plus, their return on equity, or ROE, for fiscal year 2024 came in at a very healthy 15.3%.
15.3%. That's strong. So what does that tell us about Mitsui? What does that say about how they're using their shareholders' investments?
It tells you they're doing something right, that's for sure. They're being very effective at generating those profits.
Exactly, and that's exactly what we're going to be unpacking today. How does a company, a global giant, as diverse as Mitsui, actually operate? And what are the real drivers behind these results?
Good questions.
Yeah.
Big questions.
We're going to break down their key business areas, really dig into their financials, understand their strategy for growth, and of course, how they plan to reward their shareholders and, ultimately try to get a sense of where Mitsui's headed.
The future.
The future, yeah, using their Mitsui Integrated Report 2024 as our guide. So think of this as a deep dive.
Deep dive.
Into the inner workings of a global giant.
And it is vast. Their operations. I mean, we're talking everything from energy to mineral and metal resources.
Yeah, oil, gas, those kinds of things.
Exactly. We're talking about the metals that make the world go round. But it goes even further. They touch areas like lifestyle, everyday things. Plus, they're deep into heavy industries, machinery and infrastructure, iron and steel products.
So it's a complex picture.
Multifaceted.
Yeah, multifaceted business. So let's start maybe by figuring out where their profits are actually coming from.
Sounds good.
So for the fiscal year ending March 2024, their profit breakdown shows that energy is king.
The king of their profits.
Yeah, a whopping 54%.
That's huge.
And that translates to like 68.4 billion Japanese yen in profit. So, when you have one sector contributing over half of your total profits, what does that tell you?
Well, it's a double-edged sword, isn't it? On one hand, it means they're really benefiting from high energy prices and a strong global demand.
Right.
But it also makes them, potentially vulnerable to any fluctuations in those commodity markets. And of course, there's the energy transition that's happening at a rapid pace.
Yeah, that's the wild card, right? Everyone's trying to figure out that transition.
Exactly. And Mitsui, they've stated that they're committed to renewable energy. So it's going to be really interesting to see how they balance their current strength in these traditional energy sectors with, that need to kind of future-proof themselves against the changing energy landscape.
Yeah, it's a balancing act for sure. All right, so after energy, we have mineral and metal resources contributing a pretty sizable 25% of their profit.
Not as big as energy, but still a major player.
Definitely. And then iron and steel products come in at 11%. And then the rest, like machinery and infrastructure at 5%.
Yeah.
Lifestyle at 3%. And chemicals at just 2%.
Yeah, those are smaller slices.
Yeah, smaller slices of the pie. So it's clear where their current earnings power really lies.
For sure.
So let's move on to their strengths, the foundations of their business. They often talk about their, quote, edge, unquote. What do they mean by that? What's Mitsui's edge?
Well, their edge is actually made up of several different factors. First off, you've got their really stable earnings base, especially from their iron ore operations in Australia.
Right, that's their bread and butter.
Yeah, their bedrock. And what's fascinating about this is their level of vertical integration. They own the entire infrastructure for their mines. So they own the railways, they own the ports, everything for mines like Goldsworthy, Yandi, and Jimblebar.
They're not relying on anyone else.
No middleman. This gives them a huge advantage in terms of cost competitiveness. They're not at the mercy of other companies or external factors in the same way that their competitors might be.
Makes sense. So they're in control.
Yeah, they're controlling their own destiny, basically. And their equity share of production capacity is significant, a massive 61 million tons per year.
Wow, 61 million? That's a lot of iron ore. And if we look at their profit trend in this segment, it's been pretty remarkable. Steadily climbing from 2020, reaching over 300 billion Japanese yen in 2023, then, just a little dip in 2024.
It's impressive. Iron ore is a notoriously cyclical industry. So to see that kind of consistent, upward trend in profit is really a testament to their strategy.
Yeah, vertical integration, like you said, it's a real buffer.
It is, it protects them. Now, another key pillar of their edge is their global LNG business, liquefied natural gas. They've really created this massive network for a stable LNG supply. And they even have their own fleet, 9 long-term chartered vessels to transport it all.
So they control the whole process, even the shipping.
To a large extent, yeah. And their trading volume has increased something like 22 times since they first invested in LNG. They're now moving around 10 million tons annually.
That's remarkable growth. And it's global, right? They have projects all over the place, from Australia to Indonesia, Russia, the United States.
Yeah, they're all over the map.
And with their recent investment in the Ruwais LNG project in 2024, they're expanding further into the Middle East, with production set to begin in 2028. So you have to see that as a strategic move to secure their energy supply for the future.
Absolutely. It's a long-term vision for sure, and it shows their belief in the role of natural gas in the future energy mix, even as things are changing and evolving.
Okay, so that's their resources side, but
Yeah.
their edge goes beyond just resources, right?
Yeah, for sure. They're also big players in mobility and healthcare. And their stake in the Penske Automotive Group, PAG, is a prime example. They own almost 20% of PAG, which is a big player in new and used car sales, as well as all those after-sales services. They operate in 9 different countries, and what's interesting is their focus on premium brands. About 70% of their sales come from premium brands.
Oh, wow. And Mitsui's share of the profits from PEG has grown significantly, reaching 218 million US dollars in 2023.
Exactly. And then you've got their holding in Penske Truck Leasing, PTL, where Mitsui has a 30% stake. They focus on full-service truck leasing and rental, and their share of profit is even bigger, hitting 990 million US dollars in 2023.
Almost $1 billion.
Yeah, it's not just a small-side investment. These are major contributors to their bottom line.
So it's not just about resources, it's about diversifying into these growing global markets.
Right, they're seeing the trends.
Yeah, anticipating the trends. And in healthcare, their partnership with IHH Healthcare, the largest private hospital group in Asia, shows that same kind of strategic thinking.
For sure. Mitsui holds a 32.8% equity stake in IHH.
Okay, so they're a major shareholder.
Yeah, they're not just dipping their toes. And since 2011, IHH has grown massively. They've gone from 16 hospitals to 80, and their bed capacity has skyrocketed from 3,500 to 16,500. And this expansion covers 10 countries across Asia.
Wow, those are some big numbers.
It is. And it just reflects the growing demand for quality healthcare across Asia. And Mitsui's really in a prime position to capitalize on that trend.
Okay, so we've covered where their money's coming from and the key strengths that make them so successful. But now let's shift gears a little bit and talk about their growth strategy. Their CEO talks about a dynamic transformation of their business portfolio, but what does that actually mean? How do they actually do that?
It's not just a buzzword, that's for sure. It means they're not resting on their laurels. They're actively reshaping their portfolio, aiming for that sustainable, long-term growth while still leveraging their core competencies as a trading company. They emphasize what they call, quote, cross-industry premium, unquote. And that's really about using their expertise across so many different sectors to create unique value that a more specialized company might miss out on.
So they can kind of see the bigger picture, connect the dots.
They can connect the dots, exactly. They can see the synergies and opportunities that others might not.
And the CEO, he also highlighted 3 strengths in their approach to managing their portfolio. Can you maybe unpack those for us a little bit?
Yeah, absolutely. So first of all, they really focus on balancing their near-term earnings with those long-term investments. They want to deliver results today while also, making sure they're prepared for the future.
So short-term wins, long-term vision.
Precisely. Second, they're really focused on building a balanced portfolio across different economies, so both developed and emerging markets. And they do this through consortiums and partnerships.
Splitting the risk. Yeah.
Exactly, spreading the risk and, tapping into these diverse growth opportunities. And then third, they leverage their existing expertise to move into adjacent business areas. So it's about, minimizing risk by staying relatively close to what they already know and do well.
Kind of like expanding concentrically.
Exactly, concentric expansion. It's a smart approach. And another key aspect of their strategy is what they call, quote, asset recycling, unquote. Basically, it's about selling off assets and then reinvesting that capital. A good example of this is their sale of the Peyton coal-fired power plant. So what's the thinking behind these decisions?
They're not just holding on to things for sentimental value, right?
Right. It's about recognizing when an asset might be more valuable to someone else or when it no longer aligns with their long-term strategy, especially with the increasing focus on sustainability and ESG, environmental, social, and governance factors.
So it's about adapting.
Adapting is key. And the sale of Peyton and their reinvestment into gas-fired power in Thailand, it's a perfect illustration of that. They're aiming to replicate Peyton's earnings, but in a more sustainable way.
So less carbon intensive.
Exactly. They're freeing up that capital to invest in new areas like renewables and cleaner fuels, and then strategic focus on global energy transition, wellness ecosystem creation, and sustainable infrastructure development. It really highlights where they see the future growth opportunities.
Yeah, and the Ruwais LNG project, the clean ammonia project with ADNOC, these are real concrete steps in that direction.
Exactly. They're putting their money where their mouth is. And the ADNOC clean ammonia project is moving quickly. Construction starts this year. Production is expected in 2027. They're serious about being a major player in these next-generation fuels. Now, let's see how their current performance stacks up against those medium-term targets they set for themselves under their MTMP 2026 plan.
Right, their roadmap. Well, it looks like they're on track. They've exceeded 1 trillion Japanese yen in profit for 2 years in a row now, and their core operating cash flow has been around that level for 3.
Yeah, they're hitting those targets.
And they also had this target of boosting their base profit by 170 billion yen by the end of the 2024 fiscal year.
Ambitious goal.
And so far, they've achieved 55 billion of that. So how are they driving that base profit enhancement? What are they actually doing?
It's a combination of what they call, quote, middle game, unquote, initiatives and new investments. The middle game is about actively enhancing the value of their existing investments. So it's not just about the initial deal and the eventual exit, it's about that active management and growth in between.
So making the most of what they already have.
Exactly. They're constantly looking for ways to optimize their operations, provide strategic guidance to their portfolio companies, and really foster those synergies within their portfolio.
So like a hands-on approach.
Very much so. They're not passive investors. And it seems like they're also placing a greater emphasis on return on invested capital, ROIC. It's becoming a key metric for them.
Yeah, that makes sense. You want to make sure your investments are actually generating a decent return.
It's all about capital efficiency. And they've even raised their ROE target for the MTMP 2026 plan to over 12%. So that's a signal that they're really focused on getting the most bang for their buck, so to speak.
They're serious about maximizing returns. And their approach to new investments, it's very disciplined, very aligned with their, quote, create, grow, extend, unquote, model.
Right, a clear framework.
Yeah, and sustainability, environmental, health, and safety factors, those are all big considerations as well. They're not just chasing profits at any cost.
No, they're taking a more holistic approach. And their leadership team and external directors are all involved in those investment decisions, so there's a lot of oversight.
All right, so let's go back to those key financial highlights for the 2024 fiscal year. Really dig into the numbers. We've mentioned their profit of 335.1 billion yen, the impressive ROE of 15.3%. What else stands out from a purely financial perspective?
Well, their core operating cash flow, that's a big one. It came in at around 1 trillion yen, which is a strong indicator of their ability to generate cash from their core business activities.
That's the lifeblood of the business, right?
Exactly. It's the fuel that funds their investments, dividends, and share buybacks. And in fiscal year 2024, they returned a significant portion of that cash flow to shareholders, about 38%.
Almost 40%. That's a pretty good chunk.
Yeah.
And what about their balance sheet? How healthy is their financial position?
Well, their total assets stand at 16.9 trillion yen, and their shareholder equity is at 7.5 trillion. Their debt position seems manageable. Long and short-term debt combined is 4.8 trillion, which results in a net interest-bearing debt of 3.4 trillion.
So debt's there, but it doesn't seem out of control.
No, it seems within a reasonable range, and their forecast for cash flow allocation under their MTMP 2026 plan shows that they're expecting significant growth. Their cumulative cash inflow is projected to reach around 4.2 trillion yen, and a large portion of that, 1.75 trillion, is earmarked for management allocation.
And that allocation, that's what they use to invest in new opportunities, right?
Exactly. And it's also what they use for shareholder returns. So with their cash flow expected to grow so much, there's a lot of potential there. But let's talk about the reasons behind their strong financial performance. What's actually driving these positive results?
Yeah, let's break it down.
Well, several factors are at play. First off, the overall operating environment has been favorable. The global economy has been recovering from the pandemic.
So they've had the wind at their backs.
In a way, yeah. But beyond just the macro environment, they've also made significant improvements to their business portfolio. They're in stronger, more resilient sectors now, and their investments in growth are starting to really contribute to their earnings. Plus, Those middle game initiatives, those operational improvements and synergies we talked about, those are paying off as well.
So they're not just riding the wave, they're making smart moves.
Exactly. They're not just passive participants. They're also seeing a big impact from efficiency improvements and turnarounds in some of their businesses.
They actually put numbers on that, right?
Yeah, they did. They estimate that they've gained about 70 billion yen from strengthening existing businesses, 40 billion from efficiency gains, and another 60 billion from their new businesses. So that's over 170 billion yen in profit improvement just from those internal efforts.
That's huge.
It is. It's a significant impact. And their affiliated companies in Japan, particularly in their innovation and corporate development segment, those have also been performing well, showing an 18% increase in profit. And lastly, their focus on ROIC, on that capital efficiency, it's also contributing to those strong returns.
So it's a combination of external factors, but also a lot of internal improvements and strategic decisions.
Exactly. It's a well-rounded performance.
Now let's talk about how they're planning to use that strong cash flow to create value for their shareholders.
Well, shareholder returns are definitely a priority for them. Their policy under MTMP 2026 aims to return around 37% of their cumulative core operating cash flow to shareholders.
So over a third of their cash flow goes back to the investors.
Yeah, that's a substantial amount. And they've implemented a progressive dividend policy, which means they're committed to increasing dividends over time. And their track record is pretty impressive. Their dividend per share has grown at an average annual rate of 11% over the past decade.
11% per year, that's really consistent dividend growth.
It is. And on top of the dividends, they've been actively buying back their own shares.
Yeah, share buybacks. Those could be a good way to return value to shareholders.
Exactly. And they've been pretty aggressive with their buybacks. Their cumulative total of share repurchases since fiscal year 2014 is expected to exceed 1 trillion yen.
1 trillion. Wow, that's a massive amount of money.
It is, and that represents about 18% of their total shares outstanding back in 2014, and they've canceled most of those repurchased shares, which can help boost their earnings per share. So it's a way to increase the value of the remaining shares.
So they're putting their money where their mouth is when it comes to shareholder returns. All right, so as we wrap up, let's look ahead. What's your overall assessment of Mitsu's business moving forward?
Well, their CEO seems confident. He believes in their ability to leverage those cross-industry capabilities and really capitalize on those global trends, especially in building resilient supply chains, with resource scarcity becoming a bigger issue.
More.
Yeah, that's only going to increase the demand for what they do. And their proactive stance on sustainability, their aim to reach net zero emissions by 2050, and their commitment to broader ESG issues, those all signal that they're thinking long term.
Sustainability is not just a trend anymore, it's the future.
Absolutely. It's essential for any business that wants to thrive in the coming decades. And the fact that Mitsui is continuously reshaping their portfolio, focusing on that capital efficiency, it shows that they're adaptable. They're not afraid to change with the times.
And their financial strategy, it seems pretty solid. Maintaining a strong balance sheet, optimizing their financing across the whole group.
It's about prudence, not taking on excessive risk.
And their risk management system is evolving as well. They're now explicitly including human capital and human rights risks in their assessments.
Yeah, they're broadening their perspective on risk, recognizing that it's not just about financial risks.
People are a part of the equation as well.
Absolutely. People and the planet. So it seems like they're becoming more aware of the full spectrum of potential challenges.
So all in all, they're well positioned for the future.
Yeah, I think so. And their medium-term targets for the fiscal year 2026, those give us a clear idea of where they're headed. They're aiming for 1 trillion yen in core operating cash flow, 920 billion in profit, and an average ROE above 12%.
Ambitious, but achievable.
That's right. They're not shying away from setting high goals. And while they acknowledge the geopolitical risks and the challenges of the energy transition, they see those as opportunities to leverage their diverse capabilities.
So they're turning challenges into opportunity.
Exactly. And they expect that positive cycle of investments, returns, and shareholder allocation to continue. They're focused on achieving that sustainable ROE improvement.
Sustainable growth, that's the key.
Absolutely.
All right, so to summarize, we've looked at a company with a truly impressive global reach. They're anchored by those strong positions in resources and energy, especially LNG and Australian iron ore.
Their foundations.
Yeah, their foundations. And they're making smart strategic moves into mobility and healthcare, and those are proving to be significant growth drivers.
Diversifying their revenue streams.
And they're doing it all while taking a deliberate, measured approach to managing their portfolio and embracing the transition towards sustainability.
It's a comprehensive strategy.
And most importantly, they've consistently delivered strong financial performance. And they're clearly committed to rewarding their shareholders through those increasing dividends and substantial share buybacks.
Shareholders are happy.
Yeah, happy shareholders. And it really leaves you thinking, how does a company operating on such a massive scale with such a diverse global footprint successfully navigate those constant shifts in geopolitics, the complexities of the energy transition, and still manage to consistently deliver value to their stakeholders? It's a fascinating question, isn't it?
It really is. What are the risks? What are the rewards? How do they balance those competing forces?
Exactly. And if you're interested in learning more about Mitsui and their strategies, we encourage you to take a look at their Mitsui Integrated Report 2024. It's a great resource for anyone who wants to get a deeper understanding of this global powerhouse. Thanks for joining us on the Deep Dive.
It's been a pleasure.
See you next time.